Hello traders, Gary Wagner for Trending Markets just after 10:30 in Honolulu, 4:30 in New York. Markets have been closed roughly for 40 minutes. We do have our U.S. equities market, specifically Dow Jones Industrial Average, trading moderately lower on the day, off about 47 points to close at around 17,550 on the day. When we take a look at the one chart that we've really been looking at in terms of our bias and channel, we have noted that we have seen this market trading with some very nice tops, but when we look at the bigger picture in this market, what we've seen is there's been a downside bias and we've got a cascading channel line which has been taking it to lower pricing. We did get a key distinction in that we have been typically seeing almost a full range move. You almost have that here, but you definitely get a full range move here. Full range meaning from the top of the channel to the bottom or bottom to the top. We got that here. However, this midline came in the other day. We mentioned that that was quite interesting because what we saw in this 480-minute chart was the fact that you notice you get all these reds on the way down, solid greens on the way up. You're getting a pretty clear picture of the market without that much noise. However, we did see a key distinction. The key distinction was on this particular round up, we kind of fizzled at the halfway point. Now, what is that telling us? Well, it could be telling us nothing at all, or it could be telling us that we might in fact break below this channel because we weren't able to get enough steam to make it up. The real key is going to be this: if the market in fact continues to trade lower, and there's some key numbers that you really want to look at on the S&P, but if it continues to trade under pressure and does come to the bottom of this channel, will it stall at this bottom of the channel as it has on the last couple of occasions through the month of June, or will it actually break below? Because this is the first time over the last, call it 30 days in trading, that we've actually seen this kind of action where we haven't had a complete cycle on our channel line. We'll look at that as the market unfolds through the rest of the week. Let's look at some of the other markets that we're following. Crude oil, of course, that rebounded just a little bit today, up about 1.35% on the day, 45.78. So we've seen this market really break below, just below, I believe, 45 or just above 45. I know today just above 45, and it is finding a little bit of support. We'll take a look over the next few days to determine, is this a short-term bounce in the market before returning to lower prices, or have we found some kind of double bottom in the market and it will actually pick up steam over the months, the next couple of months. Let's get to our currencies, because currencies are the current active trades that we have right now. Of course, we are short the euro. We're short the euro roughly at 109.15. Market's trading at 108.86, 87 in that area, putting it off about 0.6% on the day. In terms of the low, 108.28, and the high, 109.90. Now, we currently have that very, very loose stop up above 111. That stop was necessary, really, when we initially put on the trade, because if you recall, on the next day, it came very, very close to those areas in the markets that we're trading, the euro as well as the US dollar. So we are going to look to trail that stop down, and we'll do that over the next couple of days. Of course, we'll send that out with a special trade alert. Lastly, I want to take a look at the dollar. We are long the dollar 97.67, market trading 97.94. So we can see that the dollar has been definitely gaining some steam. When we look at our daily chart, of course, what we see, and let's go ahead and blow this up a little bit, is that when the market hit, call it roughly 96.50, and I'm basing that on the real body, not necessarily the lows, because you do get a couple of lows that go just below that, then that was followed really by 3 days of upward momentum. Now, this is that one day in which we had a wild trading range. Take a look at the way that market traded to these lows and pop back up. And then over the last couple of trading days, we have definitely seen a reversal back to what we're calling our primary trend. And my belief, of course, is our primary trend in the dollar is higher. So maintain long dollar, maintain short euro. We'll look to address the stops over the next day or so. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Wednesday for a new Trending Markets. Bye-bye.